Trading teaches you one important thing. The main rival is not the market but yourself. It is your fears, greed, and impatience that most often cause losses. Today I'm going to show you a trading session where I will try to follow the rules as strictly as possible. We'll look at how to keep control of yourself even if the market provokes risk. Now, it will be an honest practice without idealization, with real mistakes and your analysis. But before we start opening trades, it is important to set up your account correctly so as not to make a mistake. Just repeat after me. I will use the candle chart time. The time frame will be 1 minute. Now you need to turn on the indicators. For this, I will select Ocean channels and fractal in the indicators section. The parameters of both indicators can be left standard. They are completely suitable for the term of the trade that I will use. This is an excellent strategy that even a novice trader can handle. It does not require any, complex market analysis from you. Is it interesting? Then watch the video until the end. Every day the market shows new movements and is important to be able to read them. In my Telegram, I share recent reviews and analysis of key levels that I use myself. It's simple and to the point. To connect, follow the link in the description, subscribe, and send me a private message. I will help you navigate. Let's take the situation into account and open the first trade. The trade time will be 1 minute, starting with an amount of $400. My forecast is that the price will decrease, so I press the red button to open a trade. And so look, the price chart is moving in the zone of Ocean channels indicator. I am interested in the upper limit of the indicator. The price has been rising and has reached the upper limit of the indicator, which means that a price reversal may now occur. And yes, the price rebounded and began to decline, but you can't open a trade yet. Let's check fractal. There is already a red indicator trigger under the price chart when the price reached the upper limit and pushed off from it. A green indicator trigger appeared above the price chart. It indicates the end of the uptrend. Based on the signals from both indicators, I conclude that the market has really started a downward trend and the price will decrease. I told you that the strategy is as simple as possible. If you follow the rules that I will explain later, you will have no problems opening trades. In the meantime, let's follow the situation to the end. The price continued to decrease and I made a profit. My capital now stands at $9,668. A great start to the session. I'm already looking for the following situation. Let's use the example of this situation to analyze the most common mistake. I will limit myself to the trade amount of $100. I will open a trade to increase the price. And so I see that the price has reached the lower limit of the Ocean channels. The red candle has closed and the price has started to rise. The situation indicates a trend reversal. But look closely at fractal. Last time the indicator indicated the beginning of a, downtrend. There was no new trigger from the fractal indicator. This situation is not suitable for work at all. Both indicators contradict each other. When working with a strategy, it is important that both indicators point to the same trend. There is never a need to rush. Any currency pair is suitable for operation. The main thing is that both indicators give a signal. It would also not be a mistake to open a trade a little later than the indicators indicate a trend change. This is acceptable. Let's look at the situation to the end. There is very little time left. Well, the price continued to decline and I made a loss. I hope you will remember this situation well and will not make such a mistake in your work. The trade amount will be $500. I think the price will decrease. Opening the trade. As you have already noticed, both indicators indicate a trend change. The price chart has moved away from the upper limit of Ocean channels. The fractal indicator also indicates the beginning of a price decline. The situation is secure and I intend to make a profit. I'll give you some advice that will help you in your future work. I never risk opening trades for large amounts. No, you should always have some capital left over before you continue working. It is best to open several trades for a small amount. So even if one trade is unprofitable, you will still have the capital to continue working. This is proper trade management. Aha, wow. I know that account already has $10,028. Now I will find another situation and open the last trade. I think I can increase my capital with this situation. I see that after a long downward trend, the price has started to rise. Both indicators confirms this. Now, I hope you've used this strategy a lot in your work. I try to explain in detail the basic rules of operation and show which situations should be used. Now, it's up to you. Be sure to try a strategy. Strike! The last trade is profitable and my capital increased to the amount of $10,580. The session turned out to be short but productive, and that's okay. Remember, profit is more important than the number of trades. It is better to earn quietly than to lose in the race for extra entries. Write in the comments how often you trade, every day or less often.